Hello and welcome back to another exciting episode of the For the Property Investor podcast. And we're here with the weekly news. And of course, the only man that brings us the news, Nick Bendel. Welcome, Nick.
I am so delighted to be here. I was rather intrigued when you called it an exciting episode. For some reason, I thought of a line that Walt Disney used to say when members of staff came up to him and they would say, "Mr. Disney, I've got a good idea." And he would say, "No, son, you've got an idea. I'll tell you if it's good."
Oh, okay. So, sorry, I should have waited to see if you thought it was an exciting episode.
Well, I think maybe I'll have to pass judgment at the end and I'll let you know if it
Okay.
was exciting.
I will check in with you at the end to see if it was, as I said, an exciting episode.
I think we've currently got an episode and I'll tell you if it's exciting.
All right. Well, I hope the episode is not a bad one.
Okay, we're downgrading our expectations. Well, I'll also tell you if it's not a bad one.
All right, cool.
I'll give both of us a mark out of 10.
Yes. But I heard that you did something exciting this past week.
Well, that would be very unusual for me because I'm a very boring person, but I did have a very nice week. I own a business called Hunter and Scribe. We write content for finance and property professionals throughout Australia, including a lot of buyers agents. And that is why, Owen, last week I went to a 2-day buyers agent conference in Sydney. There were some really good presentations. I met a lot of buyers agents and hopefully one or two might become clients, and that would be exciting.
Yes, yes. And of course, there was one exciting person there, which was me. I was there too. Remember?
Yes, that's right. No wonder I
How could you
enjoyed it so much.
forget?
Oh,
Yes.
I have
So,
such a bad memory. It was very nice to see you.
oh, thank you, Nick. Yeah, we don't often see each other IRL, as the young people say. Yeah, so good to see you in flesh and blood. But yes, it was a great 2-day conference. So Nathan Birch from Be Invested put on this buyer's agent conference, 2-day event. Tom Panos was there in good form as usual, and a few other great guest speakers. Tom was the MC. And yeah, great content, great people. And I was there obviously with Leafield being a property management business, national property management business, looking after the property investor. Met lots of buyers agents who are buying investment properties all over the country. So definitely lots of people there that I wanted to meet, and there was a few good ones that I met. So it was a great 2 days. So yes, it would be good to, and apparently they've already booked it in for next year. So if you're a buyer's agent and wanting to get along, then definitely look out for the one next year. Buyer, as in BUYA, and I'm sure you'll see it on your socials.
Okay, well, I'm looking forward to attending again next year. I really enjoyed it.
Yes. So the reason why we're here is to hear the news. Nick, what's in the news this week?
Our first story is home building speeding up, but still too slow. Construction timelines are finally starting to shrink, but not fast enough to fix Australia's housing shortage. Master Builders Australia analysed the latest Australian Bureau of Statistics data and found houses, townhouses, and apartments are all being completed faster than last year. However, the times from approval to completion are quite high, 11.5 months on average for houses, 14.8 months for townhouses, and 32.9 months for apartments. When comparing building times today to a decade ago, it takes 36% longer to build a house and 50% longer to build an apartment. Owen, master builders say that if we want to speed up construction times, we need to invest in workforce training, we need to support more apprentices, and we need to remove planning roadblocks. Does that sound like the right solution to the problem?
Well, yes, we do need to. We need to speed up everything. Yes, we need to invest in workforce training. We need to support more apprentices and remove planning roadblocks. I know the New South Wales state government was doing a lot of work to improving the planning roadblocks. And yes, Master Builders Association, I know are working to invest in workforce training and apprentices, and which I think the federal government were working on that as well through their TAFE programs. So I think everyone's trying to do the right thing. It's just not happening as fast as everyone would like, but certainly not as fast as we need because, yes, there's still a lot, prices are still going up and, yeah, rents are still increasing as well, but not as fast as they used to. So we can see that it's definitely slowing down. And it's just interesting to see that if you were to buy an apartment off the plan these days, you could end up having 3 kids in that time while you wait for it to be built. So by the time it's been built, you might as well have bought a house.
Well, I quite like that. Master Builders are making the point, and I know the Housing Industry Association often make this point as well, that we've got a problem with our workforce. And what I don't understand is, how did we get to this place with our construction workforce? In other words, why is our workforce today relatively smaller and less skilled in the past? Do you have any theories?
Good question. Maybe that one's above my pay grade, but it's at the end of the day, it's long-term planning. And yeah, a lot of these things come down to long-term government planning. So I don't like to blame the government for everything and anything, but yeah, that's probably where we would have seen the signs many years ago. And in fact, the long-term trend of people moving away from getting a trade really started in the 80s. When we look at when the HEX system came in and the push for tertiary education over getting a trade. So yeah, there we go. We can blame Hawke and Keating if you want someone to blame. That they told everyone, yes, go through to year 12, get your HSC, and go to university and get a degree that you can't actually get a job for. Yes, don't be doing one of those dirty trades. But you know what? Their heart was in the right place because a educated population is good for the country overall. But they didn't have it balanced, where they made it uncool to be a plumber or a sparky or a chippy. So as a result, there weren't as many. And guess what? Supply and demand kicks in, Nick. And nowadays, many plumbers, sparkies, and chippies earn more than a lot of professions out there. So, yeah, who's having the last laugh now?
You reminded me of a joke I heard from a stand-up comedian about 20 years ago, and it's always remained in my mind, which is this comedian mentions that he's been unemployed for ages and he can't work it out. He went to university and he studied philosophy, and he can't understand why he was employed. He topped his year at university. And so imagine my surprise when, after finishing my philosophy degree, none of the big philosophy companies wanted to offer me a job.
Yes. And he probably went into great debt for that as well.
Indeed. Well, I see your point about tradies making more money than many white-collar professionals. Good on them. I would have been a tradie, except I'm completely useless with my hands. That wouldn't have been in anyone's interest. But hopefully we can see an improvement in the construction workforce. Do you think the government should be intervening in some way to increase the size and quality of the workforce, or should that be left to the free market?
The government can always do good things to try and influence positive things in the marketplace. By providing incentives for certain trades for young people to go into those trades, that's great. But also targeted immigration. We've talked a lot about immigration over the past number of months, about there being too much in general, which has caused a lot of these issues with the housing crisis. And but we need immigration. We need more workers in the country, and especially trades. So nothing wrong with immigration as long as we're getting the right people in here that are going to help with the supply and not just add more demand.
Let's move on to our next story, and you're going to like the headline for this. I usually write quite serious, sober headlines, but I decided to be a little bit different today. Millionaire schmillionaire. Once upon a time, $1 million home was remarkable. Now it's commonplace. As of September, 34.1% of Australia's property markets had a median price of $1 million or more, up from 14% 5 years ago, according to Cotality.
Wow.
Over the past 5 years, Australia's median property price has increased 46.8% to $857,000. So, Owen, as I mentioned, over the past 5 years, the share of markets above $1 million has gone from 14% to 34.1%. How long do you reckon it will be until the majority of markets are above $1 million?
Oh, interesting. So when we've got more than 50%, well, at this rate, it'll be within 5 years if this trend keeps on going. But it's I think the last 5 years have been quite remarkable with the growth of property markets right around the country. So it might take a little longer than that if those markets are flattening off. But we need to look at Melbourne is a very large market. And it hasn't really grown that much over the last 5 years in comparison to the rest of the country, especially Sydney. So you never know. That might help push it over sooner rather than later. And if the rest of the country is sort of growing at a more steady pace, reasonable rate, then yes, you never know. Could be sooner than 5 years. So I'm really having a bet each way. Sorry, Nick. Yeah.
Okay. Well, I'm going to put you on the spot again. Right now, the national median is $857,000. I did some maths. If that median grows at 6% per year, it will reach $2 million in 15 years. Now, do you think it's realistic for Australia to have a median property price of $2 million?
In 15 years? Yeah, that could be quite possible. If you told me 15 years ago that $1 million would not buy you many houses in Sydney Metro, then yes, it would have sounded ridiculous. So, but crystal balls are a great thing that would be nice to have. So you never know. $2 million, why not? I mean, we're all at $1 million. So what's with just adding another one to that? Yeah.
Okay. Well, if we do get to $2 million in 15 years' time, the people who are going to be buying those properties in 15 years' time are going to be today's children. How on earth are they going to be able to afford such expensive homes?
Well, it's all relative, isn't it? It's, I mean, it's never been easier to buy now than at any other time. We've got so many incentives with government incentives. And I'm sure I'm going to get canned for saying that as well. There's going to be people who come out with facts and figures to prove that isn't as easy as it was 40 years ago to buy. And yes, but it's in some ways it is easier to buy now. I didn't when I bought my first property, I didn't have all of these incentives to buy. Yeah, I had to do it the hard way. But in some aspects, it was easier to do it the hard way back then. But now there's a lot of incentives. So, and it's a lot easier to buy in different ways, in terms of not necessarily buying the property you're going to live in, but you can buy a property that to at least get into the market as an investment property, so the rent vesta. Because I mean, let's be honest. Where do we all think, especially younger people, they don't know whether they're going to be working in even 2 years, let alone 5 years. Why would they want to lock themselves down to an owner-occupied home in a place where in a couple of years they won't want to live? And then the costs of buying and selling again, it just doesn't make sense. So it makes a lot more sense for them to rent where they need to live, buy an investment property. So just do that.
Okay, well, I am sold. Let's move on to our final story. RBA says banking system in good shape. Most households with mortgages appear well placed to weather an economic downturn should it occur, according to the most recent financial stability review conducted by the Reserve Bank. Most borrowers also have large liquidity and equity buffers. The Reserve Bank added, these buffers help individual households withstand pressures on their cash flows and inhibit stress from transmitting to the banking system via loan losses. The median prepayment buffer is larger than prior to the pandemic for all but the top income quartile, which in any case remains significant, a little under 2 years of scheduled repayments. Additionally, mortgagors' equity positions are strong, with less than 1% of households currently in negative equity, a meaningfully lower share than before the pandemic. Owen, do you share the Reserve Bank's positive view of our banking system?
Absolutely. One thing we do well in this country is manage our banking system very well. It's if you go to other countries, even the United States, it's their banking system. I mean, geez, Americans still use checks. You know, those things that you write on a piece of paper and hand it to people.
I've heard
And
of them.
yeah, they still use that on a regular basis. And it's not going out of fashion anytime soon. So, you know, it's our banking system is pretty good. You know, the global financial crisis that you know, wiped out most of the Western world's banks. You know, hardly had a blip on the radar here in this country. Yes, if it wasn't for the Prime Minister at the time going overseas and hearing about the sky falling in, yeah, it's we might still have our future fund left. But it's yeah, it's our banking system, the way it's regulated is it's probably the best in the world.
Okay. Why are the overwhelming majority of borrowers both ahead on their mortgage and in positive equity? What are borrowers doing so well?
Well, positive equity is not necessarily something that you can control. It's because yeah, it's more or less driven by the market. So if the value of your property goes up, then you're in positive equity pretty much straight away. Yeah, even if you borrowed 100%. Against the value of the property. So it's only if the value of the property goes down while you've borrowed a high percentage against it that you would be at risk of going into negative equity. And again, that's a testament to what we were just talking about with our our good banking system and how well it's regulated, to make sure that we don't have those types of issues. But it helps when our property market keeps going up and up and up. But in terms of being ahead on their mortgage, yeah, it's still shows that our economy is fairly strong, even though we've been talking all year about, and for a lot of last year, talking about having being in a per capita recession for a long time. If people have still got their jobs, and they're earning income, which a lot of the country has, then they can stay on top of their mortgages. And yes, even though there are negative aspects to the economy that we keep on, the media keeps on talking about, and we keep on commentating about it, there's a lot of positive about the economy as well.
Do you want to hear some good news?
Always.
Well, we've reached the end of the podcast, and it was very exciting. And
it was.
Yeah, I reckon your performance, I'm going to give me an 8 out of 10. I reckon you were a 9.5.
Oh, thanks. How can I improve to be a 10?
Oh, that is such a good question. I mean, you've already got such high standards and yet such humility at the same time. I think maybe you need another co-host. I think your co-host might be holding you back.
Oh, no, not at all. I would never say that, Nick.
No, but you might think it.
Well, I did say I'd never say it. Yeah.
Well, thank you for carrying me today, as you do most weeks, and I look forward to chatting again next week.
Thank you, Nick. And yes, as always, I look forward to seeing what's in the news next week. We'll speak then.